Everyone knows the S&P 500 and so many people have invested into it. But is it really that good? Let's find out. It's very important if you've invested or you're about to invest into the S&P 500. I've got a checklist of 10 different criteria. These criteria you gotta follow if you want to be on the safe side. On this website called justetf.com, great website for me to actually analyze different kind of ETFs. I'm selecting for now the one which is the most common used, and this is the iShares Core S&P 500 accumulated. And you see this, it's mostly used because there's a volume of 51 billion in this ETF. So iShares, this is a product of BlackRock and with a real big volume. So every time I'm selecting some volume, the fund size is important to me. This one ticks the box, and I've got I'm only investing actually into ETFs if the fund size is higher than 500 million. That gives an indication that this fund has been around for a while, and also the likelihood that this product of BlackRock, for instance here, is being deleted is really low. So from that perspective, all good. Also in terms of replication, that's another key criteria to me. I like to have a full and physical replication. I'm not too big into swappers, but also swappers are also safe. Volatility is another important factor to me. So the volatility here is around 21%, which is still fine to me because I'm a long-term investor and I don't like to invest into ETFs, which are for long-term higher than 25%. So from that perspective, I'm fine with, and the fund size is kind of linked to the listing date. So you see, based on the sheer volume you have in terms of the fund size, it has been around for a while, which is great because it gives you historic data on how that ETF performed in the past, which is no indicator how it's going to perform in the future, but still I feel more confident in actually how that ETF has been performed in the past. And the fees here, that's actually incredibly low, 0.07% total expense ratio per year. That's really, really low. So that's a nice surprise here. Comparing that total expense ratio to active managed funds is, I think you have to at least 1% or 1.5, 2% per annum you gotta pay for active managed funds. So here, 0.07%, dirt cheap, in my opinion. Coming back to my personal checklist, distribution policy is important to me. It can be distributing or accumulating. Being German, I like efficiencies, hence I like accumulating. I don't need the dividends for me right now. I would probably say differently if I would be about to retire. Maybe then I would need those monthly or quarterly dividends. But as I'm in a job, I'm fine and rather have BlackRock taking care of my dividends and very efficiently reinvesting them into the market. So I like that. And then depending on where you live, the fund domicile might be of importance, or you may want to consider in terms of tax purposes. Performance. What we can see here is the year performance. Obviously, we are in September 2022. So we are right now in a massive decline, and we may see another couple of months further decline. So obviously the performance is over the last 12 months not as good. Looking into historic data, 2018, for those people who have been around and investing in that time as well, 2018 was a rough year as well. And then after 2018, you've seen like a performance of 30%, 18%, 28%. And this year, YTD, year to date, we're minus 23%. That is one of a bear market, and we may see further decline. So for long-term investors who have cash on the side, I think it's great time to be in the market, investing into the market in terms of dollar cost averaging. But again, I'll go into more detail in terms of performance in a moment. But for now, you want to also understand the actual exposure, where you are investing in. And keeping in mind, if you invest into the S&P 500, the top 10 holdings weight almost 30% of the entire fund. So that's big. And no big surprise, we've got Apple in here being the largest contributor, then Microsoft, Amazon, you've got Tesla, you've got Alphabet, C&A, Berkshire, United Health, Johnson & Johnson, Nvidia. These are, just the top 10. In terms of diversification, looking at the countries, no big surprise. S&P 500, obviously it's a US specific market replication. However, I'm slightly surprised to see Ireland in here as well. I was actually expecting the US with 100%, but maybe that's because I think Apple is listed also in Ireland because of tax reasons. Let me know in the comments if you have the clear answer on that one. And then also in terms of diversification, you want usually to invest into different kind of sectors. Technology, the tech sector here being the biggest part, 27%. Then you've got healthcare, 14%, consumer discretionaries, just like Johnson & Johnson, 11%, financials, you've got 10%. And then when we look into the others, because that's like the 35% still big, then followed by telecommunication, industrials, staples, etc. So that's in terms of diversification and the different exposures in terms of sectors and actual holdings. And then let's look into the performance and let's go all the way. You see, from 2010 until today, there is a long and steady growth with a few ups and downs, a significant down actually in 2020, and no big surprise, that was driven and impacted by the Corona outbreak. After that, we've seen a steep uptake and then, kind of a zigzag with up and downs. And so the down times are the times you actually want to invest. Best invest would be actually investing monthly or every single day, and because no one can actually time the market. So here is the performance into years, and you are, as an investor, you want to see some return. And looking after the 3-year return, you see like 43%, which is nice. And then the average, I think it should give you like 7 to 10%. And this is what you're after and what you can expect of investing into the S&P 500. Again, as I was saying at the beginning, depending on the year, the actual return can look very different, like slightly minus in 2018, significant positive return in 2019, again, drop in 2020, even though with 8%, I think still good. 2021, absolutely stunning with 39, almost 40%. And then in the year we are in right now, 2020, minus 10%, and most probably it's going to get tougher this year as well, if we're looking into the next quarters. Me personally, I like the heat map. On the y-axis we can see the years, and on the x-axis we see the month. To me, it's giving an overview of the performance over the years, but also after a particular month. And basically what we see is that there were some outbreaks. March 2020, we've seen the Corona outbreak, but we've also seen some significant declining month, a negative month, like in 2018, December. Then we had 2015, August, or 2011, August. So when we purely focus on 2020, we see that out of 9 months, we are in September right now, only 2 months have been positive, which means 7 months negative. I'm confident in the next coming years, we'll see an uptake. We'll see more green here. For now, we buy bargains, basically, if you're investing monthly and doing cost dollar averaging. So that is the performance, which is, I think, giving the heat map, giving a great overview for you and giving you confidence on how that S&P 500, that particular ETF, is performing. And I was touching on before as well, is volatility is one of the other key criteria to me. It should be around 20%. The lower the better, obviously. And I'm fine if there's 30%. I mean, that was a very unusual case with Corona and something we haven't seen before. So I'm fine with this kind of outbreak. But other than that, volatility around 20% to me is important. So I think I touched on 9 different criteria, and the last, number 10 criteria to me of investing into an ETF is also, is this ETF available with my online broker? So that's another criteria I'm throwing in, which is important to me. And if you want to see more analysis, evaluations of ETFs, let me know in the comment section below. This is the S&P 500. And I'm going to do another analysis of the MSCI World in the next coming days. So please subscribe if you have not done so you'll be notified once the MSCI World evaluation is being out there as well. And maybe let me know if you want to see also a comparison between the S&P 500 and the MSCI World. All right, with this, I'll see you in the next video.